Rising interest rates? A recession looming? War in Ukraine? Homes being sold way over asking? Low inventory? Buyer confidence fading? Inflation rampant? Stock market plunging? Mercury in retrograde? What the heck is going on?
We're screwed.
With the perfect storm not only brewing, but actually taking effect, is it wise to purchase a home in 2022 or wait out the storm? This is Eddie Fala, and before I go any further, please make sure to hit the like and subscribe button. That does actually help the algorithm get this video in front of more people, which is something I'm hoping you guys also prefer after getting some of the information. We're seeing inventory creep up, and buyer demand is softening. Homes are starting to sit on the market a little bit longer, and we're starting to see rates take a toll on the buying frenzy we've all gotten used to by now. Higher interest rates means businesses are paying more overhead. Things are getting more expensive for the average consumer, and there's less disposable income for housing. So what does this mean for you as a buyer in 2022? In today's video, we're going to look at whether homeownership is a good idea in this current climate, and take a look at some of the data as well as analyze what historic trends have taught us, and what lessons we can take from the previous turns in the market. The reason I research this stuff all day is because I am making my own purchasing and selling decisions directly related to the information I'm sharing with you. My goal, however, is to inform you of what's really going on, free of the bullshit, good and bad, and allow you to make your own decisions irregardless of where you are. So is it a good time to buy in 2022, or should you wait this thing out? One of the chief benefits of home ownership is the ability to build equity over time, giving you a low-cost source of cash when needed, which would be cheaper than taking out a high-interest loan, and allows you to compound your initial investment and later use that equity down the line to either purchase more properties or make improvements to your existing one. A new study reports that nearly half of the homes in the United States were considered equity-rich in early 2022. What equity-rich means is that the balance owing on their property was less than 50% of the home's value. So what can you do with all that equity? You can sell your home, cash out, purchase your next home in a cheaper area, or state, all cash. You can use that equity to make improvements to your home, only furthering the value of it. You can refinance and purchase investment properties to up your monthly cash flow and multiply the amount of equity you're building each month. There is tons of options. The longer you wait to purchase a home and the longer you keep renting, the longer you are losing the opportunity cost of building equity during that time. So while interest rates have risen and housing prices have elevated some, it is still costly for you to stay out of the market and pay rents, which are looking to rise even further in 2022. Supply is still low compared to the elevated demand, which is being fueled by millennials who have been waiting for a long time to enter the market. Buyers who have been looking since rates were in the sub 3%, but got outbid during the market frenzy of 2021. Tons of large real estate funds who are buying up any good opportunities in lower price ranges, and people who came across a lot of equity during the housing boom and are looking to purchase properties with the cash they just came upon. As I discussed in my last video, a lot of people with lots of money also see real estate as a tried and effective hedge against inflation, which it is. And they see rising interest rates as more of a nuisance than a deal breaker, because interest rates are still lower than the rate of inflation currently. So with buyer demand not going away anytime soon, home values skyrocketing 20% in value in 2021, and interest rates rising to current levels of about 5.5% on average, why would buyers not wait to get out and invest when this all goes away? Well, the data is pointing to signs that this is not going to go away anytime soon. Waiting for the perfect conditions, which is what most inexperienced buyers do, the perfect interest rate at the perfect time, in the perfect time of their lives, and at the perfect purchase price, is a surefire way to continue paying the opportunity cost of lost equity and delaying what would have been a wealth building journey. Remember, real estate is a long-term game. Although terms to purchase may not be as favorable as they were last year, you cannot treat this game with thoughts of, well, I've let the best time to buy pass me by, so I will just bow out altogether. Waiting to buy real estate at the perfect time stops you from buying real estate and waiting, which is where the real wealth accrues. Most experts are stating that home prices will not crash or dramatically correct due to the continuance of very low inventory in the market. They are expecting home values to taper off of the unsustainable growth rates that were happening in 2021 and grow at a more normal pace. Most home sellers are not interested at all in selling right now, as they received very favorable interest rates during the low interest environment we were all afforded. Now let's say you bought at the absolute top of the market in 2008, right before the crash, at the exact median price of $205,700. Interest rates in 2008 during that time were at 6.03%. So your monthly mortgage payment would have been $986 a month, not inclusive of property taxes or insurance, if you had put down $41,000, which is a 20% down payment. Now, by the time this video was made in 2022, you would have built close to 30% equity just in payments off the principal of your loan, which would amount to $45,000. And if your property rose to the value of median home prices in the US today, which is $392,000, you would have built a grand total of $277,000 in equity, which is a 6.73 times return on your initial down payment investment. Now imagine if you had purchased a home for $850,000, which would be $160,000 down. In appreciation alone, not even counting principal payments, you would have accrued over $1 million on that initial investment, $1,072,000 to be exact. So even if you had purchased at the top of the market during the biggest housing crash in history, you would have still nearly 7 times your initial investment on a 20% down payment have you held on to that property until today. This is why real estate is a long-term game. You cannot make decisions based on current market conditions and try to time the market. You play the long game and you will come out on top due to the fact that you are paying down your principal every month and your property is appreciating annually over time. Okay, that's fine and all, but pricing is so elevated right now. Is it even smart to buy? The answer to that is, it depends. If you're purchasing in an area with consistent growth and a strong economy, you likely are safe, as prices will likely only rise in those areas. However, many markets around the country have experienced a lot of artificial inflation in prices. These are areas that historically have not shown strong indications of growth, aren't supported by a strong economy, and have been getting bid up just due to the fact that so many buyers were experiencing FOMO and driving up prices without substantiated evidence. Now, there's no reason to purchase at such crazy prices, aside from the fact that they heard that their uncle, their sister, their brother, their friend down the block made a ton of money in real estate, and so they just purchased the first property they could for the craziest rate that they could. Now, these areas will most definitely experience a correction in 2022 as rates rise. We've all gotten accustomed to this buyer's market over the last 2 years, which basically forced us all into a corner and had us waiving appraisal contingencies, inspections, promising our firstborn son, paying $200 to $300K over asking just with the insane bidding wars that were taking place. That has undoubtedly frustrated a lot of you. It's frustrated the heck out of me, I can tell you that.
I knew exactly what to do, but in a much more real sense, I had no idea what to do.
But now's not the time to give up. With the rates rising, it could actually signal a better time to buy if you've been going at this for a long time, as more and more people exit the market out of fear. And as real estate no longer becomes the obvious choice for people, that will only create more opportunity for you, the savvy investor who's being taught by Eddie Fala Estates to purchase a home at the real value, rather than an artificially inflated price. Now, unlike 2008, we are not seeing the indicators of a full-on crash. The economy is still strong. People have a lot of equity in their homes, which means foreclosures won't be rampant should prices soften. And a lot of this market being propped up was from people who purchased properties all cash. A crash occurs when people default on their loans because of the value of their property sank, or they lost their jobs due to a flailing economy. The job market is still strong, and people either have a ton of equity in their home or are in it for all cash. The crash everyone is raving about is most likely not coming. However, let's talk about rising rents. Redfin, in its most recent estimate, estimated that homes will appreciate at a rent of 3% in 2022, while rents will appreciate at a rate of 7%. What does this mean for you? This means if you are left behind renting, you're about to see some hikes in your monthly housing payment. Now, the advantage of locking into a 30-year loan is that you are locked into a set monthly payment for the life of the loan, which means if you pay $3,500 a month on your loan today, it will be $3,500 a month for the next 30 years, given that you don't refinance or sell the property and buy a new one. Now, in 30 years' time, I'm going to be on a stroller, and I'm going to still be telling you real estate is a long-term game. It always will be a long-term game. Rents, however, are variable, and they rise yearly. And this is why I reiterate, purchasing a home will always, in the long run, be a far more financially sound decision. Nationally, rents rose a record 11.3% last year, which is insane. Rents are also rising due to the fact that the pandemic moved a lot of people from colder climates like the Northeast to warmer climates like Florida, Texas, Arizona, and California. From people who are now working from home and deciding not to be in climates that are more favorable to them. A lot of these people had never experienced living in these areas. So instead of purchasing a home in that place, they became renters, which only worked to further increase the demand and decrease the supply of rental units in these areas. A big real estate investor who made a ton of profit cashing in on the buyer fear during the great crash of 2008 recently said, "It's always a good day to buy a good deal, period. If prices go up, you gain equity. If prices go down, you pay less taxes. I don't care if my asset loses value. I care about rents going down. And since 2008, rents have yet to do that." Now that's an overly optimistic look on things. Most of us can't afford to have our assets' values wildly fluctuate and free fall without being in dire straits financially. So let's get a little more pragmatic about things and ground ourselves in reality. You should never overextend yourself to purchase a property simply because you hear about the guy that made $4 million flipping properties down the street. You should never purchase properties based on a hope and a prayer that the market continues to climb rapidly and catches up to how much you overpaid for the home. You should not be waiving your appraisal contingencies and inspections as this market shifts. And you definitely should not be purchasing homes that constitute a monthly payment of more than 30% of your take-home income on a hope that you will be making more money soon. So what do I do? Well, if you have your finances in order, your credit is good, you're ready to get out of the rat race of the rental market, then go for it. Find a good area with sustainable pattern of growth. Waiting around is really only a lost opportunity to build equity on your home, and therefore your net worth. Most people wait for the perfect time where the prices are low, the rates are low, and they're in a perfect market to buy a home. These conditions never happen. Be pragmatic.
It's never been good, perfect.
Here's some general rules to follow. Don't buy more house than you can afford. And don't be discouraged if you have to buy a home that you're not fully in love with yet. Let your equity grow. Let your investment work for you. And buy your dream home when the time is right. Most people only end up living in their home for 3 to 5 years on average these days anyway. That dream home you've always had in your mind that you're going to be living in for the next 40 years and your kids are going to grow up there, that's not really in line with our times anymore. A lot of times, homes are used as an investment vehicle to be able to upgrade in the future. Let your money work for you. And the only way to start doing that is to get into the market. Get your foot in the door. Second rule, don't make a purchase based on appreciation numbers in 2021, expecting the value of the home to catch up on how much you overpaid for it. Purchase a home at its real value, and don't get so emotionally tied that once the home is no longer a good buy, you can't let it go. Wait for the right opportunity. Like a girl at the bar that just refuses to go home with you, let her go. Ground yourself back to the reality and make smart, patient, informed, and solid decisions. You should also not be trying to time the market. If the right deal does come along and it fits your financial timeline to be able to make a move on it, don't hesitate on the what-ifs of the current market. And whether we're at the peak or not, I'll reiterate this again, it's a long-term game. In a long-term game, you have to have a solid strategy that you stick with no matter what the outside noise of the market is giving you. If you want some more information on the current market and have any questions, please feel free to subscribe to this channel. Reach out to me below, and no matter your market or situation, I'm happy to help answer some of your questions. This is a very general and broad overview of what you should be thinking about as a buyer in today's market, and should be very much used only as a primary stepping stone to getting in contact with a real professional and doing more of your own research online. Until then, happy learning everybody, and enjoy playing the long game.